Good evening, friends.
Good evening, sir.
Good evening, sir.
Good evening, sir.
Good evening, sir.
How are you all? How are you all?
Fine, sir.
Fine, sir.
Fine, sir.
Is it audible correctly?
Yes.
Yes, sir.
Is it visible, audible?
Yes, sir.
Okay. Welcome to the first R2R session of CA Intermediate, November 2022 accounts. As I gave an introduction yesterday in the confidence booster session, the first subject, probably for some of you, the first professional exam you're writing, especially if you're from a direct entry scheme, foundation friends would have written already at least two exams they ticked and came, isn't it? Whereas this is the exam where you need to write one of the easiest subjects, easiest exams, easy to score. Even if you do not get perfect answers, you still end up with 70, 80 with the working notes, etc. followed. So go with the good amount of confidence. So confidence at the best and give your best. Right. So this session which is going to be handled by me. I'm sure all of you know me. If you don't know me, now know me. That's it. Success is a vehicle which moves on a wheel called hard work. But the journey is impossible without the fuel called self-confidence. So wheel is required. But wheel hai, gaadi hai, body hai, that seat hai, steering hai, fuel nahi hai. So fuel is the self-confidence. So be fully confident about the exam what you're writing, especially the account, the first paper, easiest paper. Okay, go with the full josh and enjoy the exam. So schedule, first 10 minutes I'll be talking generic, 45 minutes we speak straight away about the entire subject. Okay, so maybe some of it will be multiple revision. It's okay. When you hear the same words, you can repeat and reproduce. Who knows, some of you may be able to pass with just these kind of sessions itself. Last 3 minutes high by and enjoy. First exam, hence be more relaxed. Very crucial. You have to consciously put the effort to be more relaxed. First impression is always the best impression. Chandan. So give your best shot. First accounts paper goes well. Okay, first paper goes well. It means actually all the other subjects also goes well. Syllabus mainly consists of 8 accounting standards. Very limited, because a good number of standards have been shifted to group 2 because they removed some topics only. Company accounts, then the single entry system and some special topics. Maintaining good pace is very, very important for 2 reasons. Many of us are not used to write. We're always laptop, mobile, etc. And first exam, you'll always have that speed problem. That's why legible handwriting is important. Just starting some pages, you write beautifully. Beautification not required. Legibility. Reasonably, people should understand. Don't write clumsy. Don't write in a very. They will give you extra papers if you want to write neatly. Handwriting, let it be reasonably bigger. Don't consciously put big handwriting. Whatever your handwriting, slightly. Okay, legibility is the criteria what I'm looking at it. So pace is very important. In the high scoring paper, 100 out of 125. Read the questions carefully. Read the questions carefully. So they may be asking X item, you are answering Y. Because all this examination, they asked only Y. Don't have that wrong notion. 1:45 to 2 o'clock, they'll give you a time. No doubt similar questions are asked. Single entry system. A single entry system, start preparing trading paid account. They would not ask, that would maybe 10 mark question, only to find out the credit sales, credit purchases, a cash book. Look at the question, because here we do not have time to do AP. Adhika Prasanga nahi hai. Then working notes are very, very important. I have told you 1,000 times to my regular students, 1,000 times minimum. Okay, every batch. Working notes, presentation, assumptions are very important. Stepwise approach. Step 1, step 2, step 3. So some of you will have a doubt. Sir, should I write the main answer in the first page working notes in the next page, or should I write the working note in the first page, main answer? You can write whichever you want, okay? But let all the main answers be together. Let all the working notes be together. Main answer, balance sheet on kade, then working note. P&L on kade, that may not be good. So give all the working notes, steps, everything. So together, best answer probably main answer at the beginning and the working notes at the end. However, if you feel comfortable writing working notes at the beginning, that's also absolutely fine. Nobody can stop you from getting out as long as you are positioned perfectly. Stepwise approach is important. Final answer is important, but steps always carry marks. Final answer tallied. Yesterday also I told you, probably I think in the conference booster session. No working notes, you may end up with only 50. Final answer match for 2 to 3 questions. But your working notes are superb, 90 plus. Aradhana Upadhyaya, one paper she got 47, one paper 92, 27th rank, All India. Like that, n number of examples. So it's a core subject, enjoy. Do's and don'ts. Pratibha, over to you.
Do's in the last page or rough sheet, 5 to 10 minutes, write points for each question to be attempted.
Whatever the question, 1:45 to 2 o'clock when they give. You know, first question you're going to answer. Last question also is going to be easy. Don't miss it. 99% of the people should not miss the last question. First question you cannot miss because it's a compulsory question. So in between, which is that question you may have to write at the end as a last question, just to get out of, suppose it is out of syllabus. So then 2 o'clock when you get the answer sheet, on 5 to 10 minutes, now you don't waste your time. Question number 1, okay, this is a short point. Question number 2, short point. Question number 3, some bullet points. So maybe 5 to 10 minutes you write, then your mind will be relaxed. So when you start writing, by mistake, if you forget, you don't have to do the last page again. By mistake, if you forget some point, you can just turn. Extreme case, you 1 point and don't waste 1 hour and do that. If you get it, fine. If you're not getting it, then you can always fall back. Yes, madam.
Working notes, steps, reference to correct AS number if known, reference to Companies Act if known, write correct question number including sub-questions, attempt extra questions compulsorily, if out of syllabus then full marks. Don'ts, write AS number when partly sure or not sure.
Don't write. So that's the don'ts. Next, relaxing before 3 hours and having unnecessary tension is not good. Nothing is particularly hard if you break it into small jobs. Now onwards, next 15 days, 16 days, one thing at a time. From today, no thinking other than accounts. So your exam is on 2nd, if I'm not wrong, intermediate, correct. Second evening ke baad, accounts, I do not understand. Fully focus on law. Law gets over, fully focus on costing. So this is how in between yes comes, your accounts, I did one small mistake. All the small things will come. But others to avoid. Because unnecessarily do not have unwanted tension. And be stronger. Beautiful quotation. For some of our chief guests who would have come only for today or something like that, for them it's a new quotation. Be stronger than your strongest excuse. Look at the beauty. Lovely, Deepa. Be stronger than the strongest excuse what you can do. You should be stronger. You should be above everything, isn't it? The best way to protect your future is create it. So any non-caps who are listening to this session, and if you want a copy of this, including the material which I will discuss accounts, you can just WhatsApp to this number. We will share this. Anybody, anywhere in India, we can share it. No problem. So this is about the generic. Change item screen.
Yes, sir.
Able to see accounts consider.
Yes, sir.
So next, let's quickly go through. Okay, so I'll not go for breathless. There is no necessity. Aram 145 minutes. This is a beauty. Okay, where multiple time when you do it again and again, you should know how to condense your answer. Okay, how to condense your answer, isn't it? Fine. So the first one. You're able to see the screen, Baba? Aditi?
Yes, sir.
Yeah, right. Go. Anybody can answer. So financial statements, all real accounts will appear only on the asset side. Liability side, we have only personal account. Asset side, all real account and some personal account like debtors account. All nominal accounts will appear only in PL account. If some of you wonder why should I learn this? When you do the ledger account, at least one point somewhere this gets stuck. Okay. All assets and expenses show debit balance. All liabilities in online 1 minute. I am doing Bharatanatyam. Liabilities and incomes will be showing a credit balance. All capital transactions will appear in the balance sheet. Revenue transactions will appear only in the P&L account. The first question in the syllabus, okay, examination will be account standards 4 into 5. 4 questions into 5, no choice, 20 marks straight away. Then subsequently also there will be some big standards like cash flow statement in Bodo, or it may be what you call the investment account, it may be asked. Whereas the second group only multiple, you are in 6th question also, they may ask some accounting standards. ಇಲ್ಲಿ first question compulsory, then 1 or 2 questions here and there. The accounting standards are 5 P's. Principle, ಇದೇ word reproduce ಮಾಡಬೇಕು. ಅದನ್ನ ಕೇಳಿದಷ್ಟು ಇದು ಒಳ್ಳೆದು. Multiple times when you listen, it will be good, it will get registered, ಅಲ್ವಾ? 5 P's, principle, policy, practices followed while preparing and presenting the financial statements. Okay, while preparing also you should do it. That is the next point called preparation time. In accounting, recognition and measurement comes in preparation time. Whereas while presenting under presentation and disclosure. Lease accounting, yes, 19. I need to know the account, whether I should take it as a finance lease or operating lease at the time of preparing itself. How do I disclose it in the balance sheet? How do I disclose in the notes account? That comes in the presentation. Accounting standards deal with RMPD, recognition, measurement, presentation, disclosure. Make your life simple. Keep your life simple. Simplicity is the best in life. Recognition, which is the best standard. You see the title, ES9, revenue recognition. Measurement, yes, ESL you may not have. In DSL we have fair value measurement. In inventory valuation, how do you measure the same? Presentation, okay. So how do you present the information on the face of the balance sheet and P&L? Micro and small enterprises, companies, in amount which is payable, so now it has to be shown. Disclosure, notes to accounts, contingent liabilities are disclosed, PPE disclosed, RMPD. The objectives of AS are many: inter alia, comparability, uniformity, disclosure, etc. In the case of companies, accounting standards responsibility 129 subsection 3 says every company must prepare financial statements with the applicable accounting standard. 133 is the relevant standard, and Ind AS is not in the syllabus anymore. So as of now, we have at international level and at what at the India level. At the international level, we have IFRS and IAS. Put together, they are called what? IFRS. In India level, that's it's called AS. So India level again, non-corporates, we have ICI standards. Corporates, we have 2 RMRs. Big companies, India's, which will be discussed in CA final, 500 crore above net worth, 250 crore above net worth, those companies, other listed companies. Whereas the small companies, okay, other than the India's companies, they follow compel law standards. So I repeat, so Chaitra Private Limited is a small company. Chaitanya Public Limited listed company. Chaitanya Public Limited listed company will come in the CA panel. Chaitra Private Limited, Shettisar, Panbida and Co. Proprietorship partnership, both okay follow the same standard. I follow ICS standard. Chaitra follows compel law standard. Both are copy paste. Your syllabus of intermediate. You are learning ICS standards as well as what? Compel law standards. ICS standard as well as compel law standards. Revision class people are joined later. Amazing. And then you came back, those who joined, I'll make a statement. Okay, how your result will be at that. Right, coming back. So where are we? India's. Okay, India's is basically for the globalization. IFRS has been converted into Indian accounting standard by way of a convergence. Okay, so globalization led to this concept. Now, India's is almost like 95% of IFRS. India's is almost like what? 95% of IFRS. 95% of IFRS plus carve-in and carve-out. Okay, additional points are called carve-in. Deviations are called carve-out. Okay, just glance it. Applicable standard of Group 1. AS1. Introduction standard to all the standards. Every standard subsequently, whatever is there, disclosure of accounting, inventory is there, cost or NRE, whichever less, right? Cash flow statements are presented under operating investing finance. There is an accounting policy. The 5 P's accounning policies, account standard definition, same thing. 3 fundamental accounting assumptions are GAC, going concern, equivalent, consistency. If you have followed, we know it. We do not have to disclose. But no more is never less in CA course, Aarti madam. That's why if you disclose also, I don't have a problem. But if one of them is not followed, compulsorily you have to disclose. AS2, inventory valuation. Inventory, the assets, inventories are the assets. which are either used in relation to manufacture or trading or incidental to the activities. So it mainly consists of raw material working for finished goods, loose tools, stores and consumables, etc. Inventories are valued at cost or NRV, whichever is less. However, if it's the raw material, it will be normally valued at cost only, unless the NRV of both, very important point, both raw material and finished goods, both are lesser, then you have to bring it down to NRV. Understanding, Sapna, Rashmi? So next, there are two methods of, cost formula. If the goods are normally not interchangeable, Lasya, Trishika, not interchangeable, then specific identification method, like Govinda jeans pant. Whereas, if it is goods are interchangeable, 32 size jeans pant for me is Srivatsa, then Pradyumna. So everybody it may be interchangeable. So you can just change it. So for them, fee for weighted average. So in cost formula, goods are normally not interchangeable. Specific identification method, goods are interchangeable. You have to go by either FIFO or weighted average. Overheads charging. So what is the cost of inventory? Cost sheet alli almost cost of production. Cost of production including administration overhead related to production. Works cost of the model. Now you can also take administration overhead related to production. Cost sheet. Everything included. Beyond that, whatever is there is excluded. It is a theory question. You're right. Next. So variable overheads are absorbed based on actual production, okay? Whereas fixed overhead is a variable overhead of the whole vehicle, okay? So variable overhead based on actual production, fixed overhead based on normal or budget production. Only when the actual output is lesser. Important part. Variable overhead and fixed overhead. Normally both are absorbed based on actual production. Fixed overhead, matra, you may absorb based on normal production when the actual output is lesser. Next, cash flow statement is nothing but a representation of the existing balance sheet and P&L account. Okay, existing balance sheet and P&L account under operating, investing, and under operating can be operating, investing, and financing. Anything relatable to the fixed PPE, intangible asset, long-term investment, including dividend received, interest received is investing activity. Liability side, share capital, premium, loans, interest paid, dividend paid, financing activity. Everything else, sale of goods, then payment for purchase, etc., are operating activity. However, if you're a bank or a financial institution, loan taken, loan given, interest received, interest paid, always a operating activity. Dividend paid, whoever you are, is always a financing activity because dividend is paid on the share capital. Dividend is paid on the share capital. Higher income tax paid, if it is a DDT, it is a financing activity. If it is a tax on capital gains, it is an investing activity. Otherwise, it is normally operating activity to be shown separately just above investing activities. It is shown under operating activities as a last item just before extraordinary items. Operating cash flows can be beautifully presented. I only altered it yesterday. Operating activities must be classified, okay, either under direct or indirect. Received payment, you write direct. Start with the net profit as per P&L. Add all the non-cash, non-operating item in the P&L. Athava, start with the P&L difference. So they would have given you two P&L account. Increase in P&L. Add back non-operating, non-cash of P&L account as well as P&L appropriation account. Like transfer to reserves, dividend, etc. also has to be considered. Next, PPE, extremely important. Only for tangible fixed asset. Definition of PPE starting with the plant. Anything which is used for manufacture. Property, renting out. Equipment is for administrative convenience. That's how I told you to remember the format. So plant, property, and equipment. Normally cost model. However, once in 3 to 5 years, for each class of assets, you can go for a revaluation. Revaluation, upward, revaluation surplus has to be created. Downward, P&L account has to be debited. Upward, downward, whatever you have done earlier, reverse model. Whatever you have done earlier, it has to be reversed. For example, earlier I had done an upward revaluation. Now, if I am doing Aditi downward revaluation, whatever was credited to revaluation reserve to the extent of balance available now. Balance available, it has reversed. 100 lakh in the cost of the building, 150 lakh. That means building account debit 50 lakh, revaluation reserve account, the revaluation surplus 50 lakh. A 50 lakh rupees depreciation charge model. A depreciation, okay, has to be charged to revaluation surplus only. So after 4 years, it may come down to 30 lakh. Assuming that the downward revaluation, Tejaswini, to the extent by 40 lakh, 30 lakh you debit to revaluation reserve, balance amount has to be debited to your mouth. That's called P&L account or dustbin. Okay. Upward revaluation surplus, downward P&L account, upward downward or downward upward. Okay. Do whatever you have done, exact ulta. Then the depreciation method suggested SLM, WDV and units of production method. The production units of production method. Component of method of depreciation, especially for aircraft. AS11, the effects of changes in foreign exchange rate. Three things it deals. Initial recognition. Assuming Deepa is doing some transaction in Japan, only one transaction. On that day, 30th October, what is the exchange rate? Rate into Japan yen, whatever, multiply. That's it. Second point. You have operations outside India. I have a branch outside India, or I have a associate investment outside India. So branch outside India is called integral operation. That is considered as a part and parcel of me only. Whereas associate, 25%, 30% investment, what you have called is non-integral operation. Branch, etc., PP, etc., you have to take the historical rate for conversion. Then head office account, no conversion because it's already available in the INR. All other items you have to go by closing rate, opening stock at opening rate, closing stock at closing rate. Any difference has to be transferred to P&L account immediately. If it is a non-integral operation, it has to be transferred to exchange difference has to be transferred to FCTR, foreign currency translation reserve. It will be retained as it is till the complete disposal. Assuming 30% investment you have, FCTR 30 lakh. Next year, if you dispose of 15%, don't touch FCTR. Let it be as it is. Then 100% is disposed of. The entire FCTR has to be transferred to P&L account. Forward exchange contract. Pratibha has entered into a purchase contract with the Japanese fellow. She has to make a payment to him on 31st December. 31st December, what may be the exchange rate? Forward exchange. Future transaction, enter into a contract right now. In extra amount, what you pay is called premium. What less you pay is called discount. If it is dealing in currency, transfer to P&L account immediately. Otherwise, you have to amortize over the period of the transaction. Government grant, only when two conditions are satisfied. When there is a reasonable assurance that the conditions related to the grant are going to be satisfied and grant will be received. Then only you have to recognize the government grant. Revenue grant, take it to P&L. Capital grant is mainly reduced from the cost of the asset or taken as a deferred revenue grant. Unless it relates to the land, then it will be taken to the capital reserve. Any promoter's contribution, it will be taken to the capital reserve. Suppose you are not satisfied with the condition, you have to refund the government grant. Whatever you have done earlier, exact reverse it prospectively. It is an extraordinary item as per AS5. Accounting for investments. Long-term investments are valued at cost. Current investments are valued at cost or fair value, whichever is less. Any differential amount, take it to P&L account. AS16, borrowing cost means IDAFE. Interest, discount on issue, premium on redemption of debentures, ancillary cost, finance charge in the case of a finance lease, exchange difference, one special point. Okay, all these things put together is called borrowing cost as per para 4 of AS16. Borrowing cost incidental to qualifying asset, an asset which takes a substantial period of time, is more than 12 months normally, till it is ready to use. It has to be capitalized. Everything else has to be charged to P&L account. If it is a specific loan which you have taken for a building construction, so capitalize everything. Whereas you have taken a loan, something you are using for building, something you are using for working capital, something you use for something else. Then you have to go by weighted average concept. Special points of some of the standards. Inventories I discussed already. So mainly raw material, etc. Physical verification valuation, LCM, cost formula, cost finding. Cost techniques can be what you call standard cost or retail price margin. Production overhead, I already discussed this point, extremely important. ES3 is a beautiful balance sheet. So anything related to fixed asset and long-term investment is investing. All these are called financing. Everything else is called operating. Revaluation, just now we discussed, glance it. AS10 does not cover important wasting assets like mines, biological assets, which has a life, living animal and plant. So, but covers bearer plants, the plant which takes which bears the fruit for more than 12 months is called bearer plant, like tea plantations, rubber plants, etc. covered. Next, difference among these words. Depreciation is compulsory as per AS10. Amortization is similar under AS 26. Revaluation is optional. If you're doing it once in 3 to 5 years for each class. Impairment may not be in syllabus. Kara. When the carrying amount is greater than the recoverable amount, that's called impairment. Assuming building is carried in the books at 100 lakh, whereas its recoverable amount is 90 lakh, 10 lakh rupees debited to P&L account is called impairment loss. Land, building, or both may come under 3 different heads depending upon the purpose for which you use. Shetty sir, chart accountant, use it for office, AS10, depreciable. Kirti, real estate businesswoman, so normally AS2, office AS10. Rakshita, building is or lending out, AS10, immovable property. AS11, I discussed this, the same point. How to answer AS questions, okay? So theory and practical things. You are told n number of times, but again I want Pratibha to read.
Theory, 2 arrow marks, short notes, materiality, etc. First, make reference to concerned AS with title.
Very, very
Second,
important. Many people miss this. They write as per AS2. As per AS2 inventories, valuation of inventory. What is the title? As per AS3, as per AS3 cash flow statement. As per AS10 property plant and equipment. One place in that answer, you must write the title. Otherwise, you lose half mark. Did you observe that point? Because of the stupidity, we should not lose the mark. So make reference. Next, Vodama.
second, write the definition as it is on meaning.
Or meaning.
Or meaning. Third, give an example, say materiality. Fourth, very important, accounting treatment, say.
So what is the treatment given? Okay, whenever there is a deviation, for example, 3+1 disclosure, nature of deviation, reason for deviation, financial impact, or why financial impact could not be ascertained. Next.
Say material departures to be disclosed, disclosure requirement and financials. Sixth, if possible, give connection to SA or the Companies Act 2013.
Say yes and AS4 and SA 560. The subsequent events can give. But very important is every standard ultimately the elevating the answer. Okay, so if they assume PP should be presented on the face of the balance sheet. Balance sheet assets the first item is PP. Just to show that at book value inside the balance sheet, notes to account only original cost. You remember your Dow? Rahul, you remember your Dow? Right. So Dow books okay. Thank you. Next, Odama.
Analytical theory, say loss by insolvency on 28 March made known on 10th April. First, supra. Second, if
left side connection, make a reference compulsory. Next, point number 2, definition if required. Third one is important. You have to analyze the situation and give. Fourth, fifth, sixth, if possible, you do it. Whereas if there is a problem on AS, first one is same. Every question only AS barabeku. As per AS 3 cash flow statement ... One sentence barabeku. Second one, if required, solve the question. Accounting treatment, accountancy treatment, accounting treatment, and disclose the same. Financial statements of a company. 2 within bracket 40 deals with the financial statement. First one is balance sheet. Second is P&L account. This statement account NPO IND account. Cash flow statement. CFL India SOC statement of changes in equity and CFL. Then explanatory notes to accounts. OPC small company etc. Cash flow statement is not applicable. Company accounts only. Management remuneration schedule number 5 very very important. If there is adequate profit, 197 with 198 of the Companies Act, you have to go by, if there is only one director, one whole-time director, 5%, 2 or more, 10%. Part-time directors, 1% and 3% respectively, depending on whether there is a whole-time director or not. Maximum remuneration to payable to all of them will be 11%. Important though. Next, if there is no profit, inadequate, low or no profit, then remuneration depends on the effective capital. Effective capital is the long-term fund invested within the business. Share capital, then security premium, then the long-term borrowings, deposits more than 1 year. You have to take that minus investment, minus principal expense, minus underwriting commission. You have to buy her that format. Amoeba, what I gave, important. Depends on the effective capital, 60 lakh to 1 lakh, 120 lakh per annum, plus 0.01% when the effective capital is more than 250 crores. issue of securities, the ultimate entries, bank account debit with the amount received, discount on issue, it is mainly to the employees. Okay, ESOP, etc. mainly to the employees, to share capital, to security premium. Whereas when you collect in installment, obviously you go by application stage and receipt entry, whereas transfer entry takes place in allotment stage. Then allotment onwards, first you have to pass a due entry, then you have to pass a receipt entry. Then the debenture issue based on terms of redemption. So debentures can be issued at par, premium, discount. Pass that entry first. It is redeemable at par, no extra entry. Redeemable at discount, no extra entry. Only if it is redeemable at the premium. At the time of issue itself, you have to insert loss on issue of debenture account debit to premium payable on redemption. Agreed? Security premium is a reserve which can be used only for 5 items discussed in section 52 subsection 2. Read now only so that compel law will baratta. Next, discount or loss on issue is a loss to be charged to P&L account or amortized immediately. Next, debenture and premium payable or redemption, they are not reserves. Premium payable is a liability. Financial statement, this we discuss. 129 talks about true and fair view, and 133 talks about accounting standards. Financial statement, Schedule 3 of the Companies Act deals with the same. What is Schedule 1, 2, 3? 1 is MOA, AOA. 2 is a useful life for depreciation purpose. Schedule 3 is what? Depreciation. Schedule 5, you know?
Managerial
Yes, no, we touched now. Managerial remuneration. So Schedule 3 has got 3 divisions. Division 1 is your syllabus, starting with equity and liabilities on the top, assets down. Division 2, Ulta, assets on the top, liabilities down. CFL India syllabus, NBFC may not be relevant for it. All the 3 cases, balance sheet is in part 1 and part 2 is in statement of P&L. This is the format. Sriram and Sita necessary for capital. I'm sure all of you know that. Format gotta. Yeah. Balance sheet shareholders funds, share capital, reserves and surplus, money received against share warrant. Share application money pending allotment, then non-current liability, current liabilities. So this is the format. Down non-current asset and current asset. Sriram or Sita necessary for capital format here is there. Go through Madi. The format is still important. Question expected. So P&L account only wrote a ROTE, revenue from operation, other income, total minus total income and minus expenses. Differential amount is PBEET. Keep on removing one by one. So then discontinuing operation, then EPS. P&L account only on the face of the P&L expenditure barivaga. So raw material consumption should be written first. Purchase of stock in trade. Then comes changes in other inventory. Raw material inventory ille bandagide. Whereas finished goods, stock in trade, work in progress, etc. Recall after yeah?
Yes, sir.
Yes, sir.
Yeah, right. So then comes, so this is the ನಿಮ್ಮ ಟ್ರೇಡಿಂಗ್ ಅಕೌಂಟ್ ಏನ್ ಮಾಡ್ತೀರಾ ಅದನ್ನ ಮಾಡೋದು ಫಸ್ಟ್ CPC, ಕಾಸ್ಟ್ ಆಫ್ ರಾ ಮೆಟೀರಿಯಲ್ ಕನ್ಸ್ಯೂಮ್ಡ್, ಪರ್ಚೇಸ್ ಆಫ್ ಸ್ಟಾಕ್ ಇನ್ ಟ್ರೇಡ್, then changes in other inventory. Then EP ಅಲ್ಲ, EFDO. ಏನು EFDO ಅಂದ್ರೆ so employee benefit, finance cost, okay, basically A60, depreciation and amortization and other expenses. That's the P&L account. Now how do you know it's a current or not? Beautiful FM working capital, start with the cash. Raw material purchase karo, then it will become working capital, then it finished goods, then it will become a debtors and BR. The items inside the circle are called current asset, outside are called current liability. That's called working capital. The time taken from here to here and coming back to this position is called operating cycle, depending on the operating cycle. So all those items which are convertible, receivable, payable, okay, within that 12 months, they are called current assets. All those items which are receivable, payable, okay, beyond 12 months are called non-current normally. But 12 months is a thumb rule. I am a ship construction industry. My operating cycle is 5 years. 5 years is current. I am a bakery industry. 2 days may be current, 3 days may be non-current. It depends on the operating cycle. Profit or loss private incorporation. So Pratibha, Deepa, Srivatsa, they would have decided to convert their partnership firm into company, or proprietorship into company. But they are running this business for last maybe 10 years. 1st of January, they decided that the company law permit, etc. They have taken 3 months. It has been started only on 1st of April. So that during 3 months, whatever the profit or loss found out cannot be taken as a normal profit. That's why you need to prepare a columnar P&L account. Okay, normal P&L account. Okay, columnar, pre-incorporation, post-incorporation. So how do I apportion the items when there is no specific? So time ratio, rent, salary, etc. Sales ratio, bad debts, commission, etc. Pure pre-incorporation, vendor salary, interest on PC. Important. Pure post-incorporation, preliminary expenses are written off. See, preliminary expenses are incurred in the pre-incorporation period. But the writing off takes place only after incorporation. Directors come into picture only after incorporation. Auditors appointment also later. But some auditors would have helped you in the pre-incorporation. Then auditor fees can be taken in the pre-incorporation. Then any profit transferred to capital reserve. Loss it can be written in the P&L account or transferred to loss prior to incorporation. Section 63. So the sections which are related. 52 is a Churata. 52 is a premium. Accounts related company law. 52 is a premium. 53 is no issue at discount. 54 is issue at discount to the employees. ESOP. 55 redemption of preference shares. 63 2:1 bonus issue. Capitalization of profit. Then 96 is AGM. 68, 69, 70 is buyback of securities. 71 is debenture. Okay. Sir, I could not make out of the YouTube. For 1 or 2 sessions, we'll be doing that. Right. So bonus issue is nothing but converting your reserves into capital. Best name is capitalization of profit. Concerned reserve account equal to bonus to share capital. The reserves which can be used, very, very important, are CRR, security premium, if and only if collected in cash, and obviously free reserves are available for anything and everything. Free reserves are nothing but general reserve and trade account. Redemption of preference shares, section 55. Extremely important again. Okay. Normally, preference shares will be redeemed within 20 years. Whereas if they are introduction company, you can go up to 30 years. So redemption of preference shares, premium payable or redemption, again depends on whether the big company or small company. Can I use the security premium? 52 condition is not coded. So normally for the big company, it cannot be utilized. Otherwise, it can be used. Premium payable redemption. Security premium cannot be used for preference share capital redemption. So what do you mean by that? So now preference share capital in your balance sheet is 300 lakh. Equity share capital is 300 lakh. Now after redemption of the preference share, your preference share capital should be replaced by another share capital or CRR. So that is the most important condition. So 300 lakh is the preference share capital, 300 lakh equity share capital, total 600 lakh. After redemption, you must have 600. Case number 1. There is sufficient bank balance, sufficient free reserve to CRR shift 300 and do the redemption. There is sufficient bank balance, but free reserve nahi hai. Go for issue of another equity share or preference share. Buyback of security, you can also go for issue of debentures. Redemption of preference shares, you can issue only another share capital. So 300 lakh you have a preference share, 300 lakh you have a equity share capital. After redemption of 300 lakh, assuming there is sufficient free reserve, sufficient bank balance, free reserve to CRR, 300 lakh preference share capital pay. Assuming there is sufficient bank balance, free reserve nahi hai, you have to go for issue of shares. There is sufficient free reserve, bank balance nahi hai, you have to go for issue of shares only, issue of preference share or equity share. So after redemption, CRR athava preference share or equity share capital should retain or combination. 100 lakh CRR, 200 lakh can be in the name form of a new share capital. Agreed? Yeah. Next. So CRR creation, very, very important. Adra story note. Creation of CRR. Yavaga? Creation of CRR. Okay. Creation of CRR out of free reserve when the share capital is redeemed. Section 55. Buyback of share capital. Buyback of debentures. Share capital buyback or redemption is CRR market. Whereas buyback of debentures, why you require CRR? Where do you utilize CRR? Probably the only place where you can use is issue of bonus. Beautiful chart. Concentrate. Next again, as I keep telling, revision class, revision to revision. So maybe 95%, 90% if you are understanding is enough. Section 71 subsection 2 talks about redemption of debentures. Debentures can be redeemed in multiple ways. First one is conversion of debentures into equity shares. Debenture account equity share capital. any profit transfer to capital reserve. Transferring it by way of DR or significant, probably they have removed from the syllabus. The basic concept is creating DR, making an investment, keep on doing it till the last year of the redemption of debentures. In the year debentures are due for redemption, sell off your investment, whatever money comes, redeem with the debentures. Purchase in the open market, 2 RMRs. Like Tata Limited can purchase the debentures of Bata Limited. Tata Limited can also purchase debentures of Tata Limited itself. Purchase and cancel immediately. Debenture account debit to bank account. 2, profit on cancellation. Profit on cancellation to capital reserve. Purchase and cancellation later. Initially, balance sheet debenture liability. You make investment in own debentures. As and when you purchase, investment in own debentures. At one particular stage, debenture cancel, investment in own debenture cancel, any profit transfer to capital reserve. Be careful with the X interest, come interest, wait for 5 minutes. One special theory, debenture redemption reserve has to be created mainly by unlisted companies. Listed company of 10% of the debentures outstanding. 10% of the debentures outstanding. DR investment to be made within 30th April of the current year. At least 15% of the debentures which are maturing 31st March of the next year. So new law which has come around 3 years back. DR needed to be created by debenture redemption reserve, which is also a reserve belonging to the shareholders. It is not a free reserve till the debenture redemption takes place. Past actor, are you able to catch?
Yes, sir.
Are you able to catch? Okay. So debenture redemption reserve. So minimum how much you have to do it mainly for unlisted company? 10% of the debentures outstanding. So 100 lakh debentures outstanding. So 10% means 10 lakh. That's it. But DR investment kitna karna hai? Next year 31st March. Assuming you are redeeming only 20 lakh. Iska 15%. It is not 100 lakh ka nahi hai. Aditi 120 what you are going to redeem in the next year 31st March. Iska 15% you have to create a debenture redemption reserve investment. समझ में आ रहा है? Right. Insurance claims, loss of stock has been asked multiple times. Loss of profit also can be asked, but mainly loss of stock only has been asked. So prepare a trading last year trading account, find out the GP ratio, prepare memorandum trading account for the current year. So apply the GP ratio and find out closing stock as a balance sheet figure. Apply average loss if the insurance coverage is lesser than the stock lost. Total stock lost less salvage value. Differential amount is net stock. Net stock alla mean stock claim for loss of profit because of the fire. Fire does not mean only fire. Fire can be tsunami also in this context. Insurance claim only. Loss by fire. Fire does not mean only fire. Fire can be by any more. Okay, any loss happening because of these incidents, like fire, tsunami, etc. My business has been hampered. So that particular period during which the business is hampered, okay, indemnity period, okay, say 3 months, 6 months, whatever it may be, my sales would have come down. Find out a short sales. A short sales mele, how much profit you lost. GP ratio apply the formula. So loss of profit policy as well as consequential policy should be taken separately in addition to loss of stock policy. Loss of stock policy can exist independently. Loss of profit cannot exist without loss of a stock policy. Consequential policy, loss of profit policy, loss of stock policy is must. And loss of profit basically covers 3 things. Covers gross profit lost on short sales, insured standing charges, plus additional expense which is least of the following. Actual expenses, GP on the sales generated on additional expenses, and this formula you have to by heart. Gross profit on adjusted annual turnover divided by the same thing, plus uninsured standing charges into additional expense. You have to by heart this. Okay, fine. Loss of stock and loss of profit, I told you the format. Average loss apply model. ES19. ES19 is in group 2, but IR purchase is in group 1. Use of enterprise resource by others for which they give the consideration, that is called a lease, which normally in series of payment, it can be lump sum consideration also. So AS19 is one of the classic example for finance lease. Shetty sir Shamiana business, Aditi's marriage. So she uses the Shamiana for 2 to 3 days. Aditi? So 2 to 3 days, sir. So I am the owner. I will only claim depreciation, everything. Whereas, okay, Shetty sir, Tata Motors is selling car. So the Rahul is buying that car. Yesterday he saw that car. Car which has got a light scratch on the left board. So that car what he is buying in 5 lakh into 5 lakh into 5 years annual installment is called finance lease. Finance lease in the higher purchase. Group 1 truck account, motor car account, PUC accounts are okay. So asset account to higher vendor account. So 2-3 points to be noted there. One is NIM syllabus goods of substantial value matra ide, goods of small value kittakbittare. It is not there. Like sari etc. sold on a kantu basis in villages is not there. So if you purchase the car, you need to find out what is the EMI you are paying, equated monthly installment. Point number 1. So all the 4 years, if you are paying the same amount, let's say 6,000 rupees, you must study better problem. Okay, 6,000 rupees. Last installment 6,000. Assuming interest rate is 20%. 6,000 divided by 120 into 20 is equal to interest 1,000. Principal is 5,000. Add 5,000 to 6,000. So work backward. So this may be 5 mark question. So third year again 6,000 plus 5,000 11,000. 11,000 into 20 by 120. Ange matru minus matru barbeku. First point. Second point is ledger account ಮಾಡುವಾಗ whatever is the total amount, assuming you are paying 5 lakh into 25 lakh plus residual value, group 12 ಬರುತ್ತೆ ಮೇಲೆ 26 lakh is the amount what you are paying. So in the books of the lessee, yes, you recognize the asset at a present value the minimum lease payment. Minimum lease payment and the lease rentals plus a guaranteed resale value or fair value, whichever is less. Asset account debit to lesser's account, lesser's account, lesser's the vendor's account, higher vendor account by asset account. Depreciation normal case already. Illi, if you are paying immediately something that's called down payment to bank account, balance amount mele pavan, you have to charge interest. You know, balance mele you have to charge interest. Next, departmental accounts. One of the beautiful, simple chapter. Normally both are asked, departmental branch. One of them definitely can't be asked. Departmental accounts, you are preparing columnar P&L account to know the efficiency or inefficiency each department. My favorite example, first year profit is 300 crore, next year profit is 600 crore. Wow! Don't start celebrating. Analyze whether it could have been better. So first year 300 crores profit, yarn fabric garment 100 crore each. Second year, yarn 400, fabric 400, garment minus 200. Had you been eating more extra capital, profit would be 800 instead of 600. Alva. So this is the beauty of this departmental account. Prepare columnar way. 2-3 questions. One is apportionment of some of the expenses. You have to go by stamp ratio, etc. Like pre-incorporation, what we discussed. Second one is how can I transfer the goods from one department to another department? At cost, at the selling price, or negotiated price. Like in the process costing, what we were discussing costing. At the cost of the tension ledandi. Whereas if you are transferring at selling price or negotiated price, both are similar in nature. Very important, reserve calculation, stock reserve. First department is stock reserve barodilla because your father-in-law has not sold goods from outside. Okay, so you purchased from outsiders, so obviously you would have charged the profit. His profit you cannot remove. So whereas I transfer to the second department at a price higher than the cost nominate, then I have to remove the same, then I have to eliminate the same. That is what is called unrealized profit of the stock reserve. 2 points. So 1/4 on cost is equal to 1/5 on sales. That you take care. Second point, one of the beautiful question of your study material. If they're not given the percentage, opening stock reserve and closing stock reserve separately, find out the stock reserve on the movement. For example, first example, opening stock is 10 lakh. They said 1/4 is the stock reserve. Opening stock on the debit side is what? In the general P&L account. Opening stock trading departmental account only 2 opening stock 10 lakh. General P&L account by opening stock reserve 10 lakh into 1/4. By closing stock, let's say 20 lakh. So general P&L account will power 2 closing stock reserve 20 lakh into 1/4. Artha. Whereas they are not given opening stock reserve separately. 10 minus 20, which is more, closing stock is more by 10. Okay, let me take for easy sake, opening stock is 10, closing stock is 30. That means closing stock is increased by 20. Don't write by opening stock reserve. 2 increase in stock reserve 20 lakh into 1/4 5 lakh rupees. So opening stock separately if you want, can you do it on the credit side. Closing stock debit side. Aditi, opening stock reserve separately nahi diya to opening stock and closing stock का increase अथवा decrease क्या हुआ opposite side में लिखना है. समझ में आ गया? That is the departmental trading account अथवा P&L account as the case. Fine. So this selling at net price etc. Stock reserve First department ಬರೋದಿಲ್ಲ, second one ಬರುತ್ತೆ. Departmental accounting, branch accounting, beautiful. ಒಂದೇ line definition by Shetty sir. Departmental accounting, different activities under the same roof. Branch accounting, same activities and different equations. ಅಷ್ಟೇ. But departmental accounts normally under the same roof. Today's context account departmental means different activities. Need not necessarily be under the same roof. I do yarn in Gandhinagar, fabric in Vijayanagar, then shirt somewhere else, it's still departmental only. Whether Bata showroom, Kanyakumari or Kashmir, map ulta madini. Anywhere in India, anywhere in the world, so it is same chappals only they sell, same window display, that is called branch account. Now branch account is also one more beauty, is a unit or division which carries out same or substantially same activity. There are multiple methods of accounting. It depends on how head office records the same. So dependent branches, independent branches, foreign branches. Let it become ulta. Foreign branches, AS11, Indian company having branch outside India. Okay. Athava, that's what is normally supposed to be asked. Be careful. Foreign currency is stronger than Indian currency. Multiply ಮಾಡಬೇಕು. US dollar to INR multiply ಮಾಡಬೇಕು. Whereas if the Indian currency is stronger than the foreign currency, like Japanian, divide ಮಾಡಬೇಕು. So I repeat, conversion of dollar into rupees multiply, INR into Japanian divide ಮಾಡಬೇಕು. Ulta. They are given you INR, US dollar. If you have to do a trial balance of the US, then what you would have done multiply earlier, you have to do divide. What you have to do divide earlier, you have to do multiply. Confusion aita, artha aita. Understood? Ajiti. So US dollar को Indian rupees convert करने के लिए multiply करना पड़ेगा. Indian rupee को US dollar करने के लिए divide करना पड़ेगा. उतना ही. First, because US dollar is unfortunately stronger currency as of 2003-4 years में उल्टा करते. India's that UK, they are going to sell UK to India. Rishi Sunak has become the prime minister there. And other America also they could go. We let it go. They are happy. Okay, right. So foreign branch is the integral operation. Any exchange different transfer to PL account. Independent branches, right? Like a normal entity, it is a separate entity itself. Maintain the accounts in the normal way, trading PL account, etc. You do it. Independent branch is separate trial balance. So you have to incorporate in the head office account either individually assets, liability, expense, income. Athava independent branch ki prepare a PL account. Assets, liability, PL account transfer. That's called consolidation of the branch trial balance with the head office trial balance, not AS21, which is in group 2. Consolidation is merging these two trial balances. The first one, which has got multiple options that are answered there, but a simple, easy chart. Nande notes is what you learned in regular class also. Beautifully. Okay. Dependent branches in there. The branches which are dependent on the head office for books of account, not for the transactions. So goods may be transferred at cost. If the goods are transferred at cost, it is called debtors method. Debtors method is nothing but the capital comparison method of single entry system. You prepare a branch account, 2 current assets, opening balance, by current asset, closing balance. 2 goods sent by cash received. The expenses by head office only. Difference is the profit. Branch expense barangilla yakandre cash balance at the beginning is 10 lakh. Cash balance at the end is 8 lakh. No information. That means 2 lakh in the branch expense is automatically debited in that branch account. Stock and debtors method is nothing but Caesar cut ಮಾಡೋದು. So branch stock account is nothing but trading account. Branch expense account separately ಮಾಡಿ. Branch expense account and branch credit account transfer ಮಾಡಿ. Branch stock account, which is a trading account, transfer the gross profit. Differential mode is a profit. Debtors account, usual one. Branch trading account, you know. Now, when the goods are transferred at invoice price ಅಥವಾ selling price, then what should you do? You can again go by the same debtors method. ಇಲ್ಲಿ ಡಿಪಾರ್ಟ್ಮೆಂಟ್ ಬ್ರಾಂಚ್ ಒಂದು ಫಂಡಮೆಂಟಲ್ ಡಿಫರೆನ್ಸ್ ಏನಿದೆ. Departmental stock reserve is taken in the general P&L account, whereas branch account only stock reserve is reversed in the branch account itself, not in the head office, except the third method. So, illi whatever the debtors method you did here, same debtors method you should do it here. Only thing is goods are set at an invoice price. 2 opening stock at 120, immediately buy stock reserve 20. To goods center 240, by goods center 40. Like consignment what we done. By closing stock 360 to closing stock reserve 60. Arthak idea ditto. Stock and debtors method you may use the word branch adjustment account here. Otherwise, double column method is nothing but a cost column as well as invoice price column. Invoice price column should normally match because debit side and credit both are supposed to be invoice price. If there is a difference, it means you're sold at a price different than the invoice price. When wholesale price is given to the retail price, similar to the invoice price method, but a special point here is Opening stock reserve and closing stock reserve matra. Goods and tella. It will be taken to head office P&L account. Opening stock reserve and closing stock reserve is taken to the head office P&L account, whereas goods sent to the stock reserve is reversed in the branch account itself. Last chapter, single entry system, a compulsory question where for some transaction no aspect is recorded, for some other transaction both are recorded, for most of the transaction only one aspect is recorded. It is incomplete but certainly scientific. First method of computing profit is called capital comparison. So I was following it for 20 years. Recently, ICA is also following the ledger account. Capital account bana by opening balance, by additional capital, by salary, to drawings, to interest on drawings, to closing capital. Balance sheet on the credit side is nothing but a current year profit. Prepare statement of affairs columnar way. Okay. So any difference is going to be taken as a capital profit. Conversion method is convert single entry to double entry. Use bills of exchange knowledge. Prepare trading account. When GP ratio is given, compulsorily prepare trading account. One of the missing figure. Prepare relevant ledger account like debtors account, creditors account, BR account, BP account, etc. Use the ratios knowledge and convert. Debtors turnover ratio. ಅದು ಉಲ್ಟಾ ಇರುತ್ತೆ. Debtors by turnover ಅಲ್ಲ, turnover by debtors. ಉಲ್ಟಾ ಮಾಡಬೇಕು. It is always expressed number of times. Debtors turnover 2 months ಅಂದ್ರೆ is equal to 6 times ಅಂತ ಮಾಡಬೇಕು. This is the format of the examination question which has been asked May 22. So first recent examination. Okay. First 4 are account start. AS12, 2, 10, 2 and 10 is common. AS7. Then there is a question on hire purchase again. Then loss of stock, recent so many questions. Then partnership accounts. Group 2 shift aidala. Okay, I think there's some typing error, typo error. I'll correct it. I'm sorry. Not final accounts in both. I'll just look into it once. Okay, typing error there. Non-type live. Departmental account, profit pride incorporation, pre-incorporation posting away. Company accounts. Okay, company account question definite. Final accounts will take extra care. Branch account, managing remuneration. Nodi. Okay, any one minute. That's why better you can start with question number 6. Or question number 1, you are perfectly good at it. Question number 6, one choice there. And at least one question, if you don't know also, other question compulsorily you can answer. December 21 again. Okay. So similar pattern. So 11, 3, 12, DS12 offers are there. Loss of stock, investment account, branch account, blah, blah, blah. This is the format. Theory, pure theory. Normal in question number 6, measurement, representation, disclosure. Other bage 5 marks they will ask. Question number pattern, all of you know now. Okay. First question compulsory, 5 out of the remaining 6. Okay. Right. So important areas. All these channels are extremely important. Loss of profit or stock, because good number of times loss of profit is not asked. Go through that. Single entry branch cash flow statement. Final account, schedule 3, managing remuneration, very, very crucial. Redemption of preference shares, bonus shares, higher purchase, investment account, almost everything. Limited syllabus. Physical and financial capital maintenance on the concept is there. Regular class lentil madide, go through. Okay. Redemption of debentures also very crucial. Go through. Recently, only 5 marks for theory. Theory is mainly any of the standard or some basic introduction concept of the verbal. Saptapadi steps for success. Write the relevant ES properly with the ES number and name. Working notes are very important. Attempt all the questions. Questions are lifted from 30 minutes, etc. Many people say, I could have done better after the exam. You can do better in the exam only. Then the many students who thought after the exam they'll fail. They'll think they'll fail. As long as you have followed the working note steps, etc., you'll definitely get 60 plus, 80 plus. Don't wish to write other exams. Come out, even if the exam you felt tough, relax and write other exam. Here, if you get 40, other subjects 60, 80 is cover mark. Don't miss any examination. Many people, hundreds of examples where they thought I will not pass, they got 60s, 80s, etc. Syllabus is very limited. Aim at 100. Okay, be relaxed and enjoy. Doctor says, Madam, your husband needs rest and peace. So here are some sleeping pills. Wife says, Doctor, when should I give them? No, there is not for them, not for him, madam, it's for you. What is the time?
9 p.m.
Thank you. This is called precision. I come with preparedness. Okay, I come with preparedness. This kind of sessions, yesterday also revision section, whatever. We come with session. Maybe income tax I will not be able to tell you because of the provisions. This is what's called preparedness. We come with preparedness. Okay, for the benefit of not for you, any of your juniors coming Wednesday is a session for career awareness on CA Foundation. CA Foundation starts on Thursday. Intermediate is already started. Final is going to start on November 21st. Direct entry friends who are reasonably sure after writing the examination, you can join that CA final batch immediately. Direct entry friends. Foundation students, relax and chill. In some time. Enjoyed? Okay, so it's the first examination. Just go with the full Josh. Josh kalkobedi. Okay, full Josh hogi. Enjoy matಕೊಂಡು ಬರಿ. Okay, so come what may, I am here to pass on. ಯಾಕಂದ್ರೆ 50% of the examination is won after before you even enter the examination hall. Mahendra Singh Dhoni movie. Okay, so if you have watched one of the beautiful movies, okay, where Yuvraj Singh was at the peak, he was hitting 200, 300 in all Ranji game. So when Dhoni's team was supposed to play against Yuvraj Singh team, so all the members of the Dhoni's team, they looked at Yuvraj Singh, wow, and they lost the match miserably. And Dhoni says at the end, we didn't lose the match on the ground. We lost the moment you people made a comment on Yuvraj Singh. Okay, so don't have that kind of wrong idea. Ayyo engirutte anta chiller irutte. Any question paper right now, if you take up the last 4 exams, question paper chiller because of the unnecessary pressure, tension. Adike confidence booster chilla badak kedodu, attend badak kedodu. So maintain that confidence. Go and enjoy the exam. All the subjects are what you call chiller. All subjects, especially accounts, will be easy. Aim at 100. Even if you end up with 80, sir, you are clear first group. Other 3 subjects 40 plus. Even if you end up with second group, one of the subject above 80, so second group cleared with 40 minimum. Is it clear? Okay. So ಯಾವುದಕ್ಕೂ unnecessary tension ಇಟ್ಕೋಬೇಡಿ. Relax ಆಗಿ, take extra care. ಖುಷಿಯಾಗಿ ಪ್ರಾಣಾಯಾಮ 3 times a day ಪ್ರಾಣಾಯಾಮ ಮಾಡಿಕೊಂಡು go and enjoy your examination. All the best. Keep rocking, keep enjoying. God bless you all. And thanks to the YouTube viewers. Zoom people can stay back for a minute. YouTube off madam. Who is the host?
Sir. Sir.
YouTube off madam bega. Who is the host?